Hey, you. Yeah, you. Welcome to another episode in my series Graphite Stocks, where I hope to one day have analyzed every single graphite stock on the stock market. That is of course because I am long-term bullish on electric vehicles. Every single EV uses a battery, moreover all the batteries we know of today use graphite. Hence why we are looking at graphite stocks, to try to determine which one are best for a long-term investment. Today we're looking at a very special business. We're looking at the world's largest rutile resource and one of the largest graphite resources combined. And fun fact, the company predicts to become the lowest cost graphite producer in the world. If that doesn't grab your attention, I don't know what will. So today we're looking at sovereign metals, or these ticker symbols. Let's quickly get into it with first a company overview. Very important note up front, this company is still pre-revenues. In fact, it's still years out from the first revenue streams. You see, Sovereign Metals is still in the scoping phase of their build-up to becoming a profitable mine, while many of their competitors are significantly further along in this journey. Oversimplification coming up. But the scoping phase is basically the first phase an exploration company goes through after finding a suitable resource. After that, they will need to go through multiple phases of research. So Sovereign Metals certainly is a long-term bet, not a value investment. But a long-term bet can still be very interesting. And trust me, the resource that this company has access to is certainly interesting. Cassia is by far the largest rutile resource in the world, with over 18 million tons of contained rutile. This, while the second largest resource in the world only has access to 8.1 million tons of contained rutile. And for those of you that don't know, rutile is used in manufacturing of refractory ceramic, as a pigment, and for the production of titanium metal. Rutile is cool and all, that's for sure, but we are here for graphite. So is their graphite resource of any interest? And boy, is their graphite resource of interest. This resource has a total of 23.4 million tons of contained graphite, which is significantly larger than any other resource we've talked about on this channel. Okay, so that isn't necessarily true. Saratoga Graphite has access to 60 million tons of contained graphite, which is still significantly larger, but you get the point. 23.4 million tons of contained graphite is still a metric shit ton of graphite. And remember, it's found in combination with rutile. So, because Cassia is a resource containing both graphite and rutile, turning this property into a mine will be more complex than just a single resource property. But thanks to two very fun economic phenomena, economies of scale and economies of scope, I believe we can expect the cost of sovereign metals to be significantly lower than those of mines producing just one material. And well, that seems to be what the company is predicting too. They predict to become the lowest cost flake graphite project in the world. And scale wise, they hope to become absolutely enormous. 242,000 tons per year of rutile and 155,000 tons per annum of graphite. That is an absolute massive amount of ore being processed every single year. So we're looking at a company with a massive graphite and a massive rutile resource. Very, very exciting. But is the company also a good investment? Well, let's discuss my opinions. And honestly, this company is just insane. So when we look at the company's results of its scoping study, we can see that the company only expects a capex, or capital expenditure, of about 400 million US dollars. Of course, mining companies are notorious for running over time and over budget, so let's call it $500 million to get into production. That isn't bad, especially for how large this company predicts to become. And just look at the average annual EBITDA prediction of 323 million US dollars. Compare that number to an investment today of just 400 to 500 million dollars, that certainly isn't a bad deal. Of course, there is also the other side of the coin. The company is still years out from producing any rutile and graphite. How many years? Well, time will tell. So, it is the classic situation where I'm left hella excited about the prospects of a company, but then also hella disappointed that the company isn't there yet. Okay, so the company certainly is hella interesting, but it first needs to get there. And the biggest barrier between now and then is for sure the cash amount required. So like we saw, the company needs to acquire somewhere between 400 and 500 million US dollars. And I say acquire because on the company's most recent financial statements in December 2022, the company only had 11.1 million Australian dollars on its balance sheet. Last time I checked, $11 million doesn't equate to $400 million. Captain Obvious saved the world once again. So what options does this company have to acquire that capital? 1. Dilution, meaning selling more shares on the stock market. 2. Debt, which is a bit more difficult if your plans are still mainly air. And 3. Government-backed stuff. To me, the last option seems to be the least likely, since the Australian government doesn't seem as likely to give out government grants and such. So I believe the mix will mainly be dilution and debt. On the short term, dilution will probably be the preferred method, and once we get closer and closer to production, the company will most likely switch more and more to debt. After all, by then the company will be less risky, so they will be able to get better and cheaper forms of debt. But the exact mix is still uncertain, and that is certainly a risk. Okay, let's quickly summarize my current opinions on Sovereign Metals. 1. It is a mega interesting company, like one of the most interesting graphite companies in the world. 2. It is still years out, which is pretty darn sad. 3. Funding is still quite the risk. So acquiring a significant chunk of that 400 to 500 million US dollars will be a significant de-risking event. By the way, I do not currently hold or plan to hold any shares of this company on the short term, but I would love to buy some shares for my degenerate long-term gambling portfolio. My plan is to wait for a significant dip like we saw during March 2023, which could happen anytime, for example if the company decides to dilute its shareholders massively. So that is the strategy. Wait for cheaper prices. If the company dips, buy up a tiny position and hold for a decade. Don't get me wrong, buying up shares of this company is certainly a gamble, so I'm making sure that I could lose all the money invested in this company and not care for 1 single second. Now, time for a classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.